get all the stock-specific questions answered. We are, remember, in the thick of earnings season, and now we're joined by the management of IndiaMART. IndiaMART, remember, reported its Q3 numbers. That stock is up in a way 3.3% amid a market like this. The stock is doing pretty well. In fact, the profit has jumped 56% on a year-on-year basis to 188 crores, though a bit of a pressure that's coming in on the margin front. But we are now joined by Dinesh Agarwal, who's the founder and CEO of IndiaMART. Hi, Mr. Agarwal. Thank you so much for joining us today.
Thank you very much.
Mr. Agarwal, Q3 has been largely an inline set that came in for you with a strong bottom line. Talk to us about what factors contributed to the growth and what led to the pressure on the margins.
Yeah, see, the Q3 margin are generally 1 or 2% lower than the other quarters. On a year-on-year basis, as I have guided, the quarter margin, the yearly margins would remain at the rate of 33 to 35% on the EBITDA basis. And on the cash basis, about 38 to 40% on the cash flow from operation side. For this particular quarter, the elevated profit that you can see at the PAT level and EBITDA level are coming from the other income. Other income, there has been a 82 crore rupees one-time gain coming from our investment in IDFI that has been re-rated, and that is why you see that exceptional gain. Other than that, I think EBITDA margins remain in line with the guidance.
Hi, Mr. Agarwal. This is Kavita joining in. Let's talk about paid suppliers, where the number has slightly gone down, fell by almost 1,000 this quarter after a consistent rise previously. Now, just help us understand, given recent price hikes in silver plans and moderate marketing spends, how do you balance pricing with supplier count and revenue growth as well?
See, if you can see, the collection growth has been stronger than the previous quarter. I would not say that it is basically for the price hike. It has been a combination of the price hike as well as the better upsell and better renewals in the gold and platinum segment. From the silver segments, we have taken a price hike from 28,500 to 32,000 rupees, and that is why the gross additions have been lower, and we had guided earlier also that for the next 2 quarters, the initial customer addition could be lower, and from the first quarter of the next financial year, they will be back to similar levels of about 2,000 plus minus per quarter.
Right. Also, Mr. Agarwal, the subscriber addition were negative this quarter, partly due to the price hikes and seasonality. What are your expectations on the subscriber net additions and the churn trends from Q2, Q3, FY27 onwards?
Yeah, so as I said, the price hike has resulted into lower gross addition, and that's why the lower subscriber addition in this particular quarter. And I expect the same to be in the next quarter also. But from the next year, this would be okay. On the churn side, the silver churn continues to be elevated. However, the gold and platinum are very healthy. As I said, almost 50% of these customers contribute to 75% of our revenue. And that has grown healthy. You can see collection from operation that used to be 8-9% last few quarters. This has grown to about 13-14% this particular quarter on a standalone basis. Also, the busy infotech has grown well. So the collection from operations are showing up to 17% on the consolidated basis.
But then the same kind of expectation, the overall top line growth for next 2 to 3 quarters. What are we talking about in terms of collection trends here?
So as I said, after the collection trends have gone to 8-9%, my first target is to remain up above the 10% marks so that we can be lower double-digit collection marks. And for the next 2-3 quarters, we will try to stick to that kind of target.
Right. Mr. Agarwal, what progress are you seeing in the unique business inquiries and the buyer engagement?
On the unique business inquiries, they continue to grow slowly and steadily. If you see, they are growing at about 5 to 10% year on year per quarter. And that's continuing to be the trend. We are now investing on the advertising side as well. And that is also helping us increase the unique buyer inquiries.
Absolutely. Let's also talk slightly about your deferred revenue. Do you think deferred revenue has increased year on year? And also, how are you managing recognition, and what does this suggest about your future earning visibility?
Yes, that is good. Deferred revenue this particular quarter has grown at about 17% year on year, and that displays a very good visibility into our future revenue. About 63% of this deferred revenue gets recognized in the next 1 year, and rest of the deferred revenue is beyond 1 year, because multi-year subscriptions are also part of IndiaMART as well as part of Busy. So this 1,775 crore gives us a very good visibility on the revenue trends coming forward.
Mr. Agarwal, thank you so much for taking the time out and joining us and giving us a visibility and your growth guidance ahead. We'll let you go on that note. It's time for us to slip into a short break.